we're live.
Okay, good morning, everybody. Could I just first of all ask you, unless you are speaking, to mute your screens for fear of avoiding feedback? I would be very grateful for that. Good morning. I'd like to begin by welcoming those members of the public and press who are watching the live stream of this meeting via the Council's website. Members, you are by now aware of the need to keep your video camera switched on for the duration of the meeting and to keep your microphone muted, except when I invite you to speak. Please click the raised hand function if you wish to ask a question or comment. There is always a risk that we may run into technical problems, and I would ask for your patience if we do. Should this occur, I will declare an adjournment while the fault is being addressed, and the public broadcast will be paused. If it is not possible to address the fault, the meeting would have to be abandoned until such time as it can be reconvened. Can I remind members and officers and public speakers that all virtual meetings will be recorded and that these recordings will be published at the Council's website. Members, I will begin by calling the names of the members of the committee to establish your presence. Please can you unmute and confirm your presence when your name is called. Councillor Ian Bates.
Present, Mr. Chairman.
Councillor Chris Bowden. We understand he's having trouble logging in and he's in the process of doing so, but I will confirm him to the audience when Chris joins us. Councillor John Gowing.
Present.
Councillor David Jenkins.
I'm here, Mark.
Councillor Linda Jones.
Here.
Councillor Peter MacDonald.
Present, Chair.
Councillor Terry Rogers.
Present, Chair.
Councillor Tim Wotherspoon.
Present.
And myself, Councillor Mark Goldsack. Apologies for absence and declarations of interest. Would Dawn please report any apologies for absence?
We have no apologies, and as you say, Councillor Bowden is having trouble, so should join us shortly.
Okay, he's actually just texted me, but it's a bit difficult to answer a text and chair a meeting, so I'll have to leave that to you, Dawn, and your capable team, if that's okay. Right, does any member wish to declare a disclosable pecuniary interest or a non-statutory disclosable interest? If you do, please raise your hands. Okay, I'm not seeing any, so we will move on. Item 2, public minutes of the meeting held on the 19th of February 2021. We are asked to approve the minutes of the meeting as a correct record. Can I ask any member who does not agree with the proposal to click the raised hand function on the right of your screen now, please? Okay, so as soon as I am physically able to, I will sign them off as a true record of the meeting. Thank you for that. Item 3 on the action log. Officers, do we have anything to add to the action log? Stunned silence, so I guess that's a no. If any members have any questions on the action log, would you please use your raised hand function on the right hand side of the screen now? We're moving at good pace this morning then, so that brings us to, have I missed an item there?
Chairman, Councillor Jenkins has got his hands up.
I apologise, Councillor Jenkins. Come in, please.
I was trying to use the open mouth function, but that doesn't work when you're on mute. Minute number 307 seems to be rather old, and minute number 322 seems to be drifting.
Right. I don't have the set of minutes in front of me, Dawn. I apologise to put you on the spot here. Do you have them in front of you?
I do, Chairman, and 307 is mine. So if I take that one, 322, I don't have an answer to, but we'll certainly get back to members. But 307 is in relation to the overall business case review as part of the CAMS 2020 Shire Hall disposal Alconbury proposal. We are now reaching the position where we can almost bring the summary back to the committee, but it will be unfortunately the first cycle in the new administration, which is not unhelpful in terms of the members of that committee. Some will be new and will need to go through it in some detail, obviously, because the details that sits behind it will be effectively new information for them. So we are holding a very detailed briefing in May, and that report highlighted on 307 will be brought to this committee in the May or the first cycle in new municipal year.
And
Thank you,
322, could you just give us what that is, please?
322 is a construction of Northstowe Heritage Facility, Chairman, which I'm afraid I can't answer that, but we'll get Quintin to do a note round to the committee.
Okay,
Um,
right.
The
Thank you.
last time, sorry, Chairman, the last time I did follow that with Quintin about a month or so ago, and it hadn't progressed at that stage, but I will follow up and send a note round.
Could we make sure that note goes round to all the current members, because effectively
Yeah.
we are and remain members of this committee up until I'm assuming the 6th of May. So please make sure that we all get an update on that.
No problem.
Apologies, Councillor Jenkins, you're quite right. There's a bit of drift on there, and we need to keep a good close eye on that. So well spotted. Okay, I'm going to move on, if I can, to 4 petitions and public questions. Dawn, do we have any?
We don't, Chairman.
Okay, thank you very much. That moves us on to item 5, clean electricity supply for Swaffham Prior Community Heat Project via the private wire from North Angle Solar Farm. Cheryl and Claire, I believe you're either a joint team or one of you is bringing this to the table, so you're welcome to go.
Yes, so hello, I'm presenting, but Claire's there because this is a committee paper which covers off a linkage between 2 projects. The North Angle Solar Farm, which Claire leads, and the Swaffham Prior Community Heat Network, which I lead. I want to refer members to page 23, which is the appendix and the map, which shows both the location of North Angle Solar Farm at the top of the map and the location of Swaffham Prior and the Community Heat Network at the bottom of the map. And in the middle, there's the Burwell Village and the place where both projects would connect into the local distribution network. The local distribution network is run and managed by UK Power Networks. And we're advised that both projects connect into that particular point, which is the substation that also connects in to National Grid. When we were looking at the costs of connecting both the North Angle Solar Farm and the Swaffham Prior project into Burwell Local, we have a traditional process, which is that you work with UK Power Networks. There are 2 sets of costs, contestables and non-contestables, and the total costs for delivering 2 cables, one from North Angle to Burwell Local, one from Swaffham to Burwell Local, would be about 7.98 million. Those cables, if we go through the traditional approach, would then be run and managed by UK Power Networks. And what that would allow is it allows North Angle Solar Farm to export its electricity generation, and it allows Swaffham Prior to access electricity to run its heat pumps. What we have proposed is that we think that option B, which is a private wire, would give bigger benefits for both projects, but also more strategically to the council. So if you change from ownership of the cable from UK Power Networks into the county council owning the cable, the costs that we have currently identify that we could reduce the overall capital cost from 7.98, which is option A, to 6.1 in option B. Although we would have costs associated to managing that cable and finding a piece of land to rent it, and we have got easement costs, we still think that the overall cost would be lower than if we went the traditional option A route. The main reason for doing this, though, is that when you put or supply electricity from North Angle to Burwell Local, you sell your electricity at the wholesale price, and that's 5 pence a kilowatt hour. When you buy electricity, you will be buying it at, say, a retail price of somewhere around 14 pence a kilowatt hour. So you're putting electricity in and directly you're taking out. But there's a gap of about 9 pence through that process. And so what we're hoping to do is, with the private wire, is supply electricity directly from North Angle Farm through to Swaffham Prior for the volume of electricity that the heat pumps require, But everything else then goes into the traditional distribution network and is sold at wholesale price. The benefit is that you can make savings on electricity prices effectively for Swaffham Prior Community Heat Network, and it shields your wholesale price for North Angle Solar Farm at that price that you can agree of 5 pence a kilowatt hour. There are some challenges, and the challenges mainly come through around what is the planning route for getting this connection organised. So there are two options that we face. So one option is permitted development, and this is where a licensed provider, like an independent connections provider, digs and lays the cable. That's the route that we would conventionally do. Normally, the cable then gets handed over to UK Power Networks, but what we're expecting is that it comes to us as the private wire owner. What we are trying to get to the bottom of is to understand whether we can do that and use these licensed provider powers of an independent connections provider to take a route of permitted development on this cable. If we can't, our option B is to submit a planning application. So the challenges with a planning application is obviously you're linking two projects. You're then going to have to look and assess it on EIA, so environmental impact assessment, and you then have to go through a process of submitting an application and then delivering the construction through a procurement process. So our recommendation is to agree to move forward on option B. We'll bottom out the issue of whether we can use permitted development or whether we have to go a planning route. And we will start work with rural estates. So Tony's team, they've already started looking at what the easements and the routes could be for digging that private wire and finding a piece of land to potentially host our private substation, which would be located in the area of Burwell Local Substation, the one owned by UK Power Networks. So I think that's it. Any questions? Anything Claire wants to add?
No, not at the moment, thank you.
Okay, thank you. Right, members, you've got the recommendations and report in front of you, and I know everybody will read it. So raise your hands now, please, if you've got any questions. And first off is Councillor Jones. Linda, please.
Thank you. And I think this is a really interesting project, and I'm very supportive of it because it fits in with the climate change agenda. It fits in with moving to net zero carbon, and it fits in with what we need to do in the future. A number of issues had already been addressed, but could I ask a new one, which is this replicable? Because in a way, the Swaffham Prior project is in some ways a demonstrator project of what can be done with the community. Now, there are lots of other communities across Cambridgeshire where this could also be applicable. But there will be a benefit for Swaffham Prior residents. Will this model be replicable in other parts of the county?
So Councillor Jones, if you have an energy demand, which is what the Swaffham Prior has got with the heat pumps, what you're looking for is to find somewhere located, someone who's generating. So if you chose to do this, let's just say somewhere in Huntingdonshire, and there was a solar farm quite close to where you were trying to locate that, you would ask that solar generator whether you could potentially set up a private wire and go through a negotiation on price. So the answer is yes, you can do it. The issue, or let's say the benefit we've got at Swaffham Prior is that you've got two projects happening at the same time, which is coincidental and helpful, and they're both being managed by the county council. But we would hope that in other areas, you could also talk to generators to have and look for this opportunity.
Yeah, come back, Linda.
Yeah, thanks very much. Yeah, could I just have one follow-up question, which was about, I mean, clearly there's a big difference between option A and option B in terms of costs, But there are issues, as I know you flagged already, about land ownership, way leave, building the substation, the private substation, and so on, and the maintenance. Are you reasonably confident, which is all you can be at the moment, that those costs will be significantly below? I mean, there's quite a big margin, significantly below what option A would require us to pay.
So in our discussion with Bouygues, that is the understanding we have from Bouygues, that in terms of the actual physical delivery will be cheaper. What is unknown is where the piece of land is and how much that could cost. Now, if we can find a piece of land which is suitable, which is on county council land, then we have some control over that. If it's not, then that's a negotiation that we'd have to look at. Obviously, the easements are the other challenge. And one of the things we've been looking at to try and manage that issue of being held hostage on a particular piece of land was to try and have 3 different routes that you'd be looking at so that you could manage that negotiation better. So on the basis that we don't get held to hostage and we can find a piece of land, I think we're confident that could come in at a better price. But there's always that risk.
Thank you.
Okay, thank you, Linda. Peter McDonald, please.
Thanks, Chair. So 2 quick questions, Cheryl. One is around the maintenance and the liability for a private wire, because presumably both of those things come onto our radar if we go for that. I'm kind of assuming they wouldn't be showstoppers, but I'd like to know anyway. And then the second one is for the substation. I noticed that the estates team will have to, look at locations for the substation. Again, that seems, you seem to be relatively confident. I just want to check that's not a showstopper either.
So Jack Kennedy and Tony's team has been working on looking and trying to find locations for the substation. And my understanding at the moment is we don't think that's a showstopper at the moment, but if we do, then we'd obviously have to come back and talk to you about it. The issue around maintenance and liability. So the idea is that you would set out a procurement for a maintenance contract on the cable so that if anything did go wrong, that you would have it repaired quickly and easily. Now, cables are laid, about 1.20 meters down. And so we're not fully expecting that there would be significant maintenance liabilities on the cable. The issue, though, is that if something does go wrong, for example, someone constructs something, they're not aware that the cable is there, then that is a major challenge because you're not able to sell your electricity from the North Angle Solar Farm. So we are looking to get that procurement for the contract of the maintenance of the cable specified through Bouygues, because we need the help to do that. We don't have the technical knowledge to do that, so that we can go out and get those costs. I can't give you a cost right now, but I understand from Bouygues that those would be reasonable.
Okay, thank you.
Okay, thanks, Peter. Councillor Jenkins, please, David.
Thank you, Chair. Linda raises an interesting point, and in fact, this relates to some extent to 3.10 opportunity and the idea of you running your own local electricity networks and thereby insulating yourself from the higher prices of the national grid. It only really works, of course, unless you have a connection to the national grid, because that gives you the buffer between high demand and low demand. But on the point of 310, can we just be sure that this is a project with a very specific focus, and that any spurs that go out to other industrial estates, etc., come forward in their own rights as projects themselves to be independently authorised?
Yes, I mean, because if you wanted to connect a further spur, it would have to be a project and a business case discussion. So yes, I totally agree.
Okay, thank you. Councillor Bates, Ian, please.
Thank you, Chairman. I'm quite content to accept the recommendations as laid out on the paper. Let's start with that. But there's obviously a considerable amount of work with risks and costs as we go forward. So my thought really is that when it does come back, there needs to be some quite detailed costs associated with this particular project, you know, particularly with maintenance and liabilities and way leaves and all the other issues. So I think it's maybe something for another day, but I think the issues of the risks and the financial benefits for the project need to be laid out very clearly, very, very clearly in the next thing, particularly related to the solar farm and that income that we would get from that. So I think it's a matter of accepting what we've got before us today. But there is, I think, some more detailed work to do when it comes back to the committee, Mr. Chairman.
Yeah, I don't disagree, Ian. I think we've got some challenges here, and actually that's one of the couple of points that I'd like to raise. But I'll do those after Councillor Rogers, who's just raised his hand. Terry, please come in.
Thank you. It's a question in regards to National Grid. I think in the past we've had problems with connections to the National Grid and various costs involved. How would the National Grid treat us as a private tender with regards costs, Cheryl? Do we know on that? Is it an increase or do they have a standard cost?
Okay, so so what you have is you have the distribution network, which is the network from 11 kV up to 132, and then you have National Grid, which is above that, the even higher voltage. So we're looking to connect in on the distribution network. So we've had quite a few conversations with UK Power Networks and the route that we want to take here. And the big issue that we were trying to protect was that we want to connect into Burwell substation with North Angle Solar Farm. And we want to keep our position in the queue because they run effectively a queuing system in terms of connections. And the importance around that is that when you're in an area which is actively managed because it's constrained, you are curtailed sometimes from exporting. And obviously, if you go further down that list, sometimes you can end up with higher curtailments that you'd want. So UK Power Networks have obviously accepted our offers and connection, or given us offers and connections to date, so they know that we can connect. Claire, was there anything that you wanted to add there or not?
No, I think you've covered that. Thank you.
Okay.
Okay, Terry. Okay, thank you. Just a couple of points from myself before we move on this, please. Just for clarification, Cheryl, can you just explain the percentage of the power output of North Angle that would be going to Swaffham as opposed as a whole of the output? So we're looking at 34 megawatts coming out of the solar farm. What is the figure and percentage that's going to Swaffham?
Yeah, it's about 5%, but I know that you know, I have got Matthew on the line, I think, because Matthew's been doing very detailed reviews of the financial models. Matthew, it's about 5%, isn't it?
Yes, if you want an exact figure, I can look that up for you in a couple of minutes.
No,
it's that sort of amount. Yep.
For the sake of my discussion point, about 5% is close enough. So the point I want to say is that Cheryl will attest that I'm also, as the local member for Soham, been speaking to Cheryl constantly, and we have plans afoot further down the line to look at if we can do this. It goes to a point I think that Linda made about replication. This is a similar thing. That if we can do this private wire to this project in Swaffham, then is there any other aspects that we could do a private wire to? Like, could we use green electricity to run schools that are within a couple of 100 yards of the site? Could we use green electricity to local businesses, etc., etc. Now, the answer is possibly, as we stand at the moment, but Cheryl and I have had discussions about that, and we're very much hoping that they can be future project discussions as we move forward with this. Is that fair, Cheryl?
Yep.
Yeah. So I think that I found that quite encouraging, that, you know, the idea that we could run a primary school and a village college, a very large village college that are literally within about 500, 600 yards of the actual solar farm itself, could be a very encouraging step on that. Just to go back on something Councillor Bates raised, this may sound a bit picky, and I apologise, officers, as it does, but this is the C&I committee, and the C&I committee is about looking to make money or save costs. So when we're presenting a report like this, could we be really treated as very simple beings and have the return on investment figures made much more clearer and presented in that way? Is that a fair challenge, Cheryl?
It's always a fair challenge. I think, yes, next time we can. I suppose with this, because it was saying you've actually agreed costs for this private wire through the business cases that you've already approved. One which went to this committee, which was in December. The costs for covering off connections are in there, and one at E&S committee with Swaffham Prior. And so the return on investments were through those two business cases, and what the costs for this are covered in that.
Yeah, I agree. What I'm saying is, and I know this is a little bit extra work for you guys, the report and the raison d'etre for the E&S committee is a slightly different requirement than it is for the C&I committee, and I just think it needs tweaking for presentation to each committee. That's what I'm saying. I think the data is there. It's just a moot point. I'll be honest with you, it was a point that I'm raising because it was a point that was raised by Chris Bowden, who is obviously still having trouble getting into the room. But I do think there's some relevance to it. With no other hands raised at this point, we are asked to confirm support for option B, a private wire solution connecting North Angled Solar Farm, Swaffham Prior Community Heat Network and Burwell Local Substation, as set out in paragraphs 2.4 to 2.7, and its implementation as set out in the next steps under section 4. We're asked to delegate the implementation decisions on option B to the Executive Director, Place and Economy and the Chief Finance Officer in consultation with the Chair of Committee and Energy Investment Working Group, providing these decisions fit within the investment cases approved for both projects. And we were also asked, point 3, to note the private wire connection risks and opportunities set out under sections 3 and 6. I don't believe I've ever heard any I'll say that again. I don't believe I've heard any against discussions on this. So if anybody's got a point that they would like to abstain or vote against these recommendations, if you could raise your hand. If I don't see any hands go up, then I won't need to go to the vote. I'm not seeing any hands, Dawn, so we can carry that one as unanimous. Thanks very much for presenting that. Well, pair of you, and we'll move on. Tim, did you want to come in before we move off on this?
Yes, Chairman, and I wasn't wanting to signal any dissent with the previous resolution, the recommendation. I was just asking, in connection with Councillor Bowden that you mentioned there, have we given up on trying to connect him to the meeting? Because, I mean, I, for one, would really appreciate his input into items, the rest of the items. I mean, yeah, I would have appreciated.
No, we haven't. We haven't given up, and we're hoping he'll be able to dial in. We can't get him in the regular route, so we're going to try and get him to dial in.
Yeah, Dan Snowden is dealing with it at this moment, and to be fair to Dawn and I, we're frantically texting each other saying where are we at on this, but it's difficult to do that and chair a meeting, so I'm leaving it in the capable hands of Dan and himself. But Cheryl and Claire, thank you very much again for your presentation and time this morning. Thank you. Okay, we're going to move on to item 6. Infrastructure fund selection. I'm not quite sure that's the full title for this, but I think I'm bringing Anne Betts-Walker to the table, and I'd also like to welcome a couple of guests from Arling Close here, Fazora Katrak and Greg Reddings. I'm hoping I've got that. I'm hoping I've got the pronunciation of those right. Anne, are you there?
Yes, thank you very much, Chair. I was going to say I'm here with my colleagues Chloe Rickard and Tom Kelly, and from Arling Close, our financial advisors, Firoza Katrak, Paul Roberts and Greg Reddings. We're here today to propose a final investment using Treasury management. We propose a clear fund for a primary investment of between 10 and 12 million pounds.
Chris Bowden.
Join the meeting.
Sorry, Anne, if you could just hold 1 second.
Of course.
Chris, I believe you've now joined us on the telephone. Can you, for the sake of Democratic Services and the watching audience, confirm your presence in the room?
Was that question to me, Mark? Chris Bowden?
Yes, Chris, if, you've inadvertently just answered it. I was asking you just to confirm your presence in the room. If you could just physically, if you could just audibly do that so that we can be noted for observers and Democratic Services themselves, please.
Thank you, Mark. Apologies. Yes, I am present in the room by phone only, I'm afraid. For some reason, I just cannot get access by the normal Zoom method.
Okay, well, you're most welcome, Chris. Thank you. We are actually at the item 6 on the agenda, page 25, the infrastructure fund selection.
Thank you.
Anne, I'm going to pass back to you, and apologies for the interruption. Thank you, Anne.
Oh, no problem. I'll just rewind a little bit. We are here proposing a final investment using Treasury management. We propose a clear fund for primary investment of between 10 and 12 million pounds, and a secondary investment of between 8 and 10 million pounds in further funds for diversification purposes. The secondary investment gives you some choice as to whether it is 1 or 2 funds that you prefer to go for. In line with our current commercial strategy, Commercial and Investment Committee's investment group identified in the region of 20 million of further funds available through Treasury management that could be deployed on a medium or longer term footing. The group agreed to explore investment into a green infrastructure and or clean energy funds for further diversity of the portfolio. The scope of the investigation was to assess investment options that meet the requirements of the Council's Treasury management strategy and a financial income target, whilst seeking to meet the Council's ESG, environmental, social value and governance objectives, and contribute to our net zero carbon strategies and approach. In November 2020, Arling Close Limited were appointed as investment advisors for this specific investment selection. They are an experienced Treasury advisor and finance consultancy with a large public sector client base and very familiar with advising local authorities. At the end of January, Arling Close Limited presented their initial report for further consideration, a long list of 24 funds that met the initial screening criteria based on security, liquidity and yield, including specific preferences regarding United Kingdom domicile, high ESG approaches, and a preference for infrastructure and environmentally positive funds, resulted in 7 of these funds being recommended for initial review. On the 4th of February at the C&I Investment Group meeting, it was agreed that a primary infrastructure fund investment of between 12 and 15 million, which was UK orientated, cleaner, with medium volatility, and this would be either Fund A or Fund B in your confidential packs, and that there would be a secondary investment of between 5 and 8 million, which would be either Fund C, Clean Energy, or Fund D, Global Infrastructure, again in your confidential packs. A further due diligence exercise was then undertaken on these 4 nominated funds. There are 2 main areas that I wish to highlight. Firstly is the link between the exclusive ESG, environmental, social value and governance criteria and income in returns of these types of funds. And secondly, the correlation and diversity between the funds. you will see in section 3.4, we speak of yield and ESG link. Whilst ESG credentials of the selected funds are important, income is an important consideration in recommending this investment. A high level of ESG means less choice and less diversification of funds, impacting the risk portfolio of the investment and the wider council investment profile. Exclusive as possible in the current market means low returns focused on capital appreciation rather than regular incomed dividend. An example in one of the funds where a portfolio, for example, may have exposure to power generation using natural gas as fuel. These assets form part of a larger portfolio of power generation assets owned by a specific company. The fund's overall exposure to that type of energy is therefore aggregated exposure via a number of companies, all of which own natural gas assets within broader portfolio of assets that's skewed towards renewable. These assets are typically highly efficient combined with cycle gas turbines or combined heat and power plants, which have the benefit of capturing and using thermal energy resulting from the combustion process. This type of efficient decentralized power generation forms a key element of achieving energy efficiency improvements. The companies through which natural gas exposure is obtained are typically not seeking to add or develop additional capacity. Investment is focused on renewable forms of generation that will dilute gas exposure within their asset base. The fund itself does not envisage this type of sort of weighting increasing over time. This will reduce in the portfolio. Finally, there is scope within a power gas asset to be retrofitted, as we know, potentially creating a carbon neutral asset. As and when this becomes relevant in the context of the fund's holdings, they would expect to split the natural gas exposure to reflect this. So there seems to be movement across from these funds to move towards this. Regarding net carbon investment, it is difficult to take a view on this measurement, in part because currently carbon disclosures for the investment world are not standardized. There is consideration with some funds developing their own ratings underpinning the EU directive MIFID 2. The expectation is that a taxonomy will be developed and harmonized across all investment classes in the near future in order to standardize this information, which would mean for us better reporting on those funds holdings and what they are doing. You will have seen in section 3.3 a number of funds have close correlation. 3 funds are explicitly focused on infrastructure, and the 4th includes renewable energy infrastructure as a subclass, indicating significant overlap of fund holdings. Fund D, in your confidential pack, has the least overlap in comparison because of its global rather than UK specific focus. The uncertainty of the COVID-19 pandemic has impacted the market with a higher degree of correlation than would be usual in non-COVID times. In the longer term, it is anticipated that the funds will display greater divergence with one another. And when compared with our current council investments, the level of diversity increases slightly. Therefore, some consideration needs to be given by members to the mix between the primary and the secondary investments. Due to all these factors, we are proposing Fund A as the primary investment with an average income return of 4.9% by quarterly dividend. And there are assumptions that the capital may appreciate at a rate of 2.8% per annum. And Funds D and C as secondary investments to ensure diversification and compliance with Treasury management strategy. Colleagues from Finance and Arling Close are available to answer any questions. Thank you.
Thank you, Anne. Well done. Thank you very much for presenting that. It's a lot to take in. I think this paper. There are some interesting challenges on it. I'm sure we're going to get some interesting questions. And I would like to thank again Feroza and Greg for joining us today and to be available for any members' questions. So I was expecting a flood of yellow hands to raise, but nobody's actually raised any hands yet. Anybody got any questions on this, please? Well, saved by the light of the day. Right, Terry Rogers, you were first. Oh, now they're coming. Now I've got more hands here than held at the end of a concert. That's great. Terry Rogers, please.
Sorry, just unmuting. I was hoping to go last, but I just put in a feeler for a starter, and I'll come back later perhaps. At paragraph 2.3, you have a little quote there with likely ESG. What do you mean by likely ESG, please?
I'll try and take that if that's okay. We do not have a specific ESG policy where we have directly outlined exactly what our ESG criteria are. Even when we were working earlier with the earlier multi-class credit investment that we made. And so what we have done is we have taken that ESG as a basis to start with. But if we want to be very specific about it, we really should think about developing a policy with very clear definitions.
Follow up, if I may, Chair.
Please, Terry, yeah, carry on.
Have you therefore not consulted or have consulted with the pension fund with regards to ESG policy? Because if
I did have a long conversation with one of the employees working in the pension fund. I'm not sure if I'm able to mention his name in this forum.
Right, names apart, you've spoken to the pension fund, and
yes, absolutely.
Did you not follow their direction?
We did. We took their papers, and they actually passed on information to us in terms of documentation, and we have gone by those guidelines. Yes.
But later on, you're talking about 9.7% probability of an ESG contamination, if I may call that, within two funds.
Could you, sorry,
I consider that to
point me to, could you point me to the exact?
I'm sorry, I've just trawled down. It was in, I'm looking at other things now, I'm afraid, but I just made a note of it as I did. I didn't actually put the paragraph number. It's there somewhere. I'm not, I thought you might have known your own paper.
3.4.1, I believe.
Say again, Dawn.
3.4.1.
3.4.1, thank you. Yeah, there we go. Brackets, average of 9.7%.
Yeah.
Do you not consider
Sorry,
that to
I'm
be,
just trying
do you
to.
not consider that to be high?
3.4.1. Sorry, I do beg your pardon. 3.4.1. Sorry, I'm on the same page as you now. Yes, they average across both of them as 9.7% in terms of that particular investment.
Well, whereas the pension fund now with an investment of 3.6 billion has an average ESG at the moment, it was 1.3 last time I looked. I've just been told it's gone up to 1.7 because the value of the fund has increased. I think that's quite a large discrepancy between those two figures. Would you agree? Yes. But you're happy to go with that on a fiduciary responsibility?
I think that the Treasury management rules are important in terms of security, liquidity and yield. And in particular, we're looking at Fund D as giving us that diversity, because what we're looking for with the other funds is up to about a 40% overlap in investment, which potentially does not give us the diversity that we require. I don't know, Tom, would you have a view on this at all?
I think all I'd add, so if you look at the totality of the Treasury funds we're proposing today, I think that average percentage does come down to somewhere closer to 3 or 4%. If you then expand that to the total Treasury portfolio, which is 3 or 4 times the size of what we've got here altogether, then that will come down further to 1 or 2%. I can't remember off the top of my head which fund it is, but I believe one of the funds we're proposing is also invested in by the pension fund. So I think there is quite good synergy and overlap. obviously the pension fund has got different responsibilities to all of the employers, but we have liaised with the officers in the pension fund as well.
Thank you, Tom.
Okay, Terry.
Leave it there for the moment, Chair. Thank you.
Thank you, Terry. Peter MacDonald, please. Councillor MacDonald.
Thanks, Chair. And thanks for the summary and the presentation. I think that the only major issue that I question, and I'm still looking at it, 3.4.1, two things in there. I do recognise that you say that's a potential bridging to a green investment. So I note that, and also note that you're saying that we would have the opportunity in terms of Treasury management to perhaps opt out of that. It just seems as though we'd sort of taken our foot out of the water, and now we're touching our at least our toe back in the water again on a non-green investment. So I just wondered if you could comment on that.
Chloe, would you like to take that one?
Thanks, Anne. Morning, everybody. I would, as of course I would say that this isn't a non-green investment, and actually one of the funds we're talking about is deemed a very clean energy fund. However, what we have to think about is that they are on a journey as we are. And so they are going towards exclusivity, but they're not quite there yet. And so I'd still say it is relatively green. It is not exclusive. It is not zero. If we want zero, that is available in the market, but it doesn't meet the terms of Treasury management, and it certainly wouldn't get the returns you want. So there is a fundamental decision for you guys today, and I don't envy you in that. Do we have one that is very green positive, but not exclusive? Or do we go exclusive, at which point we have to ask whether the investment is the right thing to do at this time? For me, I wouldn't bring something in front of you if I didn't think that we can influence and that we would have some stewardship here to say, this is what I think we can do. And to be quite glib, and I hope you guys will forgive me for this, if we don't like it, and if they don't move in the way that we're wanting them to do, we have good liquidity on this. We can make a decision. We can think about, okay, actually a year, 3 years, 5 years, if it's not going the way that we want, we move our money.
Okay, thanks.
Thank you, Chloe. Councillor Bowden, Chris Bowden, and in full form as well. Welcome, Chris. Thank you. Your question.
Thank you very much indeed, Chairman, and my apologies. I've no idea why I had so much difficulty connecting this morning. I've examined this very carefully over some period of time now, and I believe that the balance which is being suggested by officers is the correct one. We've got to be careful just to chase yield all the time, because it's very often very difficult to predict what yield will be. In fact, if you really knew what yield would be when you're dealing with equities, then you probably wouldn't be either working for or being a councillor in Cambridgeshire County Council. You'd probably be living a life of luxury in some penthouse somewhere on the Riviera. So we've got to be careful about paying too much attention to yield targets and to the historical yield returns which have been quoted. And my concern about this, and my reason for supporting what officers is saying, is not a simple rush for yield. It is my concern about the lack of diversification that we would have were we not to include C and D, and particularly including Fund D. And the reason that that diversification is important is that diversification to a great extent de-risks the whole project. It doesn't fully de-risk it. Nothing ever fully de-risks things like this, but it significantly de-risks the project, because funds A, B, and C have, in my opinion, far too great an overlap for us to, in a very casual way, just accept that we take those and nothing else. So I regard Fund D in particular as being of real importance, not merely in terms of chasing yield, but much more importantly in getting greater diversification and therefore de-risking the whole scheme. And it's for that reason I think that we should go ahead with this. And I think that if we've got to have a balance here between the policies that the council has concerning fossil fuels, and also the requirement that the council has to make best use of the assets that it has and to get the best investment returns that it can possibly get. And as has been explained, all four funds are deemed to be clean funds. And I think that we've got to be really careful not to be so purist that we end up taking unacceptable risks with the council's investments, which could come back to bite us very badly indeed.
Thank you, Chris. Thank you very much. Councillor Jenkins, please. David.
Thank you. This is an interesting one. Can we just be clear about the meaning of a couple of words here for starters? Because we bounce around things like clean and green, etc., etc. Well, clean and green specifically. Over the recent decades, of course, we've been concerned with clean energy as being energy that doesn't pollute. And that's what natural gas is. It's clean because you burn it and you don't get the nasty stuff. Green is an all-encompassing term which is somewhat imprecise. What we're concerned about is generation of energy which doesn't result in carbon production. And natural gas is as bad as anything else for that. We heard earlier on that consideration of ESG is important. It's not. It's fundamental. It's the future of the planet that we're talking about. It's why we declared a climate emergency. And I've heard a number of times people talk about balance and compromise. At the risk of name dropping, I attended an event with Mark Carney the other night, along with about 500,000 other people probably, but nevertheless, it was a fairly intimate affair. And he was very clear. You do not compromise. You have an objective, which is to reduce carbon. You don't compromise for this council's yield. You go and invest in reducing carbon. It seems to be a perverse strategy to say, we want to get better, so we're actually going to do this thing, which makes life a little bit worse, because on average, it won't make a great deal of difference. I'm sorry, we have to reject D, and we have to ask our advisors to go away and come back with something which is actually a clean investment portfolio and not one which compromises our fundamental belief that we've got to do everything we can to reduce carbon. It's fundamental. Thank you, Chair.
Thank you, David. Thank you. Linda Jones, please. Councillor Jones.
Thank you. I'm very much in support of what Councillor Jenkins has just said. I think this is not my area of expertise, but it seems to me that the council has made commitments. And what we're now saying in a narrow, and you can't be that narrow, commercial investment sense, is that clean energy is too high a risk, gas is a lower risk, that will bring us more returns, so let's go for that. I'm being crude about it, but essentially I think that's what's being set out here. And I think Councillor Rogers drew attention to, we're talking about nearly, well, 14% of investment in portfolio D relates to investment in natural gas. I think we have to balance commercial returns with the fundamental position of the council. And the position of the council is to drive to net zero carbon as soon as we can. And I don't think these two are can be reconciled. And I think that the commercial investment needs to understand that and take a slightly broader view than I feel it has been taking. So I can't support this.
Thank you, Linda. Thank you. Councillor Bates, Ian, please.
Thank you, Mr. Chair. An interesting discussion, I think, that we've having. Okay, I think we need to just remind ourselves that we're commercial and investment panel, and we have to have some balance. apologies to use the word balance, but I think the balance actually has been met with what is being suggested here. Okay, and that does include D. Okay, so I think we have to consider that. And if you look about our financial income target, okay, that's why we need the balance. Okay, to try to give those balances. So my view is relatively simple. I'm not an expert. I rely on other people to be those experts, which is why we employ people to give us advice. And I think I'm content to accept D along with all the others. And I think that does give. I mean, not all eggs are all in one basket. It is spreading across our portfolio, and I think you often just need to spread across our portfolio. So I'm content with adding D into the proposals, Mr. Chairman. Thank you.
Thank you, Ian. Thank you for that. Councillor Wotherspoon, Tim, please.
Yes, first of all, Chairman, I do apologise for having missed quite a lot of that discussion, but I guess I'm here just in time before the end. So first of all, I mean, I myself am passionately committed to reducing carbon emissions, and I try to follow a very carbon limited lifestyle. However, my main house is heated by gas, and I cannot survive in temperatures below 10 degrees. So somehow I have to heat my home. And at the moment it is heated by gas. Now, I feel, I don't feel that I shouldn't be doing that, because that's the heating system that I have in my house. I am minded to move towards some sort of renewable heating in the future, but at the moment I pay to burn gas in my house. Now, I heard in the presentation of the nature of the natural gas related investments that we are considering here, that there was no investment in new exploration, and furthermore that there were opportunities in the existing gas infrastructure to move it towards a renewable future. And there are several possibilities at the moment in reusing the gas infrastructure. One is to convert it to hydrogen. Another is to use it for pumping desalinated water, and so on. And so the possibilities, or the green possibilities of natural gas investment are ones which make me personally comfortable with the recommendations before us today. Thank you.
Thank you, Tim. What a reasoned debate, to be honest with you. It's a really, I think right at the start of this, it's a really interesting and fascinating discussion and debate around this. I actually think the paper has been presented very well. I think it's all laid out for us there, and this is about where we're at. But it's fairly obvious on this one. I'm not seeing any other hands, by the way, so it's fairly obvious on this one that we haven't got consensus of opinion. Oh, Terry, did you want to come back in?
Yes, if I may, Chair.
Yeah, certainly, Terry. You did say that you'd like to, so apologies.
I've listened to the debate, and I realise I'm sitting on a very broad fence at the moment, and I've got to look at the fiduciary responsibility of the council, and also against what I would call the responsibility of investments, RI. One of the things I feel is that perhaps if we could add just a small phrase or a clause to the recommendation, that there is a 6-monthly report from either Chloe or Anne as to the progression of the funds towards an ESG, or a better ESG, or responsible investment. I then might be persuaded to make a real decision and not sit on the fence.
So let me just get that right for you, Councillor Rogers. So what you're asking for is an amendment on the recommendations to make number 5 a 6-month report on the movement of Fund D towards ESG recognition?
If that's possible, I'm looking towards to Claire and Anne, whether that's feasible or not.
Can you comment on that, please, officers?
So with any investments, we have a quarterly review, and Tom and his team very actively reviews across their investment portfolio. And I would expect this to be one of those criteria that they would have in there that would fit with our overall strategy. So I think the answer is yes, unless Tom really shakes his head at me. He's not shaking, so I think it's a yes, Terry.
Okay. Can I just ask something else? This is such a significant debate and such a delicate subject. We have with us Feroza and Greg from Arlington Close, who have helped us get to this position. Could I just invite either of you? Is there anything that you would like to say to us at this moment in time, based on the debate that you've just listened to?
Thank you, Councillor. It's Feroza here answering this particular question. Is that yes, you can always monitor what the assets in the portfolio are on a regular basis. You would get, in most cases, a monthly fact sheet from the fund, and certainly in some cases a quarterly fact sheet. So you'll be able to see what the mix of investments is, what the asset allocation is as well. The question is whether the funds, because these are infrastructure funds and holding such instruments, they are unlikely to be changing their underlying investments on a very regular basis. So you might find that even 6 months from now, you might just find the portfolio pretty similar in its actual structure as it is now. That's all I can say. It's not going to be a very rapid change. It's not like buying the equities of, say, a pharmaceutical company or a commodities company, etc. These are slightly longer dated investments within the portfolios.
Okay, thank you for that, Feroza. That's an interesting comment. David, bring you back in, please. David Jenkins.
Yeah, that was an interesting response. Because what I was going to suggest is that we hold off from D until their ESG rating has improved to a satisfactory level, because that is the way we're providing the incentive to the market to do the things that we wanted to do, consistent with our fundamental climate emergency policy. But if it's going to take that long, we need to look elsewhere.
Okay, fair point. Cheryl, I'm minded to bring you in. It's unusual to have an officer that's not on the paper to come into the paper, but I'm sure that you've got something. No, Cheryl, please. I'm sure that you've got something relevant to bring to the table. So please do keep it to facts, please.
Yeah, well, actually, Councillor Jenkins just started on that. So I just want to put a couple of facts then. So this week we've had the Independent Commission on Climate Change interim report. And as part of that, they highlighted that Cambridgeshire has a higher carbon emissions by 20% against the UK average. And that Cambridgeshire is going to be the place that has the biggest or one of the bigger impacts of climate change. So those were two pieces of information which I think are really important for us to consider in the back of our mind. And then the third bit I think that is important is we've just gone through a COVID pandemic. And the lessons that are coming out of that pandemic mean, which were published quite recently, was saying that we should have considered going into lockdown more quickly than we did. And we would have prevented higher levels of death and possibly higher levels of economic challenge. So I think it's really important that when we move forward, that we also look at some of the experiences we've had during this last year on the pandemic and account for that in the future around some of our decision making here. That's all I wanted to highlight.
Okay, thank you, Cheryl. Thank you for that. It's a really interesting one, as we said. Let me just add, I haven't taken part in the debate, but I'll just add my two penneth worth on this. I have some real sympathies for the positions of, particularly voiced positions of Councillors Jones, Jenkins, and to a degree Rogers. I really do. I'm looking at this. I've read the documents. We've debated it at pre-meet, etc., etc. It's a real dilemma here. Listen, if we could, and this is completely left field, I'd say no to the investment. Let's invest in a Cambridgeshire-based company that could build solar panels that we didn't have to ship from halfway around the world. You know what I mean? That's a completely different left field approach, but we can't, and that's not what we're debating on today. We're debating on what is in front of us for a C&I committee, where, you know, our duty of care is to not just the people of Cambridgeshire. I also got a duty of care to the people, you know, the well-being and the fiduciary well-being of the council. So I think we're going to have to go to the vote on this. Can I just ask, please, there was a suggested amendment from Councillor Rogers that we add in a 6-month review, but there has been subsequent debate since then. Can I just come back to Councillor Rogers? Would you still like that added in as an extra line item, please?
I would, yes, Chair. I've listened to the experts, and from my own knowledge on reporting of the funds, I think a 6-month review is appropriate.
Could I just ask on that, and if I could possibly come back to Vizora, I apologise for Rosa, if I could just ask you again, totally accepting that there's unlikely to be dramatic steps in any direction within 6 months, is it likely that a 6-month review thereafter will start to see some change, or are we talking years before we see significant change, in your opinion?
I would like to imagine that there might be that change, Councillor, but it's not I who am managing that particular fund. It is perhaps maybe you can ask these questions directly of the fund manager. Just have a meeting with the fund manager online, and then I cannot answer that particular question for them.
Okay, all right. Thank you for that. Look, what I'd like to do, we've got a few hands come up. Terry, I recognise your hand. I'll come back to you in a moment. But Tom, if I can, I'd like to bring you in on this because I think you've got a pertinent point to this part of the debate.
Yeah, I think the suggestion I'd make, listening to Councillor Rogers' suggestion, is it certainly seems to me to be a sensible thing to expect certain aspects of monitoring. So I think we should be looking at ESG. I think we should be looking at the composition of the fund, and I think we should be actively monitoring it because that's a key part of the treasury management strategy. So I think that fits very well with the proposal and is something that's sensible to suggest. I think what we've got to just be careful about is setting preconditions at this stage, and we need to be bringing that monitoring actively back to investment group and continuously reviewing the whole portfolio in line with the council's liquidity and ensuring what we've got is still appropriate. So that's what I'd suggest.
Thank you, Tom. That's very useful. Now I've got 3 more hands. I'm going to go back. This is a debate that warrants a debate, so I'm not going to close this down just to get to a decision. I think there's an awful lot of good coming out of the discussions here, and I think it's right that we do so. So Terry, I'm going to come back to you first, please.
The big question we face with looking and investing in funds is whether you're in or whether you're out because of RI or ESG. If you're out, there's nothing you can do. That fund will continue whatever it wants to do. You can bring no pressure. If you're in and the fund is aware that every 6 months you are looking at them with the threat that you could withdraw money, that is influence on that fund. And that's why I'm suggesting that we do have a 6-month review on a particular fund to make sure that they are looking at ESG and RI and hopefully will meet our requirements. I put it that way. And that's very simple. In or out. If you're in, you can bring influence. If you're out, you might as well forget about it. That's all, Chair.
Okay, so that's known as the Okie Kokie principle, I assume, Terry. Thank you very much for that one. Linda, I'm going to come to you, please. Linda Jones, then Chris.
Yes, thank you. I mean, it seems to me to be a bit of a fig leaf, really, to say come back with a 6-month review. I mean, we're talking about actually quite a small investment here. I think it's 4 million, isn't it? Could I ask what the size of Fund D is overall, please?
Anne, can you answer that one?
Yeah, I'm just to get it absolutely right. I think it's in the range of about
775 million.
775 million, yeah.
My case is made.
Just for those that haven't picked that up, so the case being made for the amount of influence that 4 million's got over 775, yeah?
Precisely that. Thank you.
Thank you for that. Terry, you've got your hand up again. Do you want to come back in on this?
It's not immaterial, the amount. I know the amount is very small. It's the pressure you bring as an authority and the clout that you have as an authority and the persuasion you can put to other investors.
Okay, thank you, Terry. Right, Chris Bowden, please.
Thank you, Chairman. There's been a slight change of wording, but an important one since Terry first made his suggestion, because I think it's very important that we get the wording correct, particularly taking Tom's comments into account. What Councillor Rogers originally suggested was that we ask officers to bring a report back to us every 6 months. And I think that is what it is that we should be suggesting here, rather than that we are reviewing it, that we are asking for a report to be brought back to us. I think that wording difference is a quite important thing.
Okay, I'm sure Dawn has got that noted and ready to read back, haven't you, Dawn?
Yes, Chairman. Bear with me a second. Ask officers to bring a report back to committee on Fund D every 6 months.
Well, that's exactly what I'd written down, so that was good. That's good. Okay, members, we've obviously not got a unanimous voice on this. Is everybody okay? Please indicate with your raised hand if not. Is everybody okay if we take all items 1 to 5, with number 5 being that which Dawn read out, all as one item, or do you want a separate vote? If you're okay, sorry, raise your hand if you're not okay in having these all considered together. Okay, David would like the David.
No. All I'm going to say, Chair, is that 1 to 3 are not decisions.
No, I agree with that. I agree with that. So we're really looking at items 4 and so we can take items 1 to 3 as the first part, and then have a debate on item 4 and item 5. Is that correct? How everybody sees it? Peter, I guess that was the point you were going to make, was it? Okay, thank you. Right, well, in that case, then we'll ask for the votes, please, on items 1 to 3. So the report recommendations were: note the contents of the report, item 1. Item 2 was endorse the diversification of the Treasury investments into infrastructure funds. Item 3 was consider its view on the acceptability of the volatility and sector exposure of Fund D, in particular, as detailed in section 3.2 and 6.3. Can I ask all those that are in favour of those, please, to raise your hands? Sorry, we don't normally vote like this, do we? It's been a while. Dawn, how would you like us to to hold this vote, please? It's been that while since we've not had a unanimous decision on C&I. I'm a little bit out of kilt here, so apologies. I think we should actually raise our raised hands on the system if we are in favour. Are you okay with that?
Could I suggest a roll call just in case there's any issue with raised hands? Because I know some members do. I know it takes a little bit longer.
Listen, we've got to use the time wisely. I take your recommendation, Dawn, and I will lead us through a roll call then. Okay, if you make the notes. Right, thank you, members, for lowering your hands. So we're voting on accepting the recommendations 1, 2, and 3 as I just read out. Councillor Ian Bates.
Support.
Councillor Chris Bowden.
Agreed.
Councillor John Gowing.
Support.
Councillor David Jenkins.
I agree that we have done those things.
Councillor Linda Jones.
Agree with the first 3.
Councillor Peter MacDonald.
Agree, Chair.
Councillor Terry Rogers.
Agreed.
Councillor Tim Wotherspoon.
Yes.
And Councillor Mark Goldsack. So actually we were unanimously agreeing on questions 1 to 3. Well done, but the roll call worked and it's always a good exercise. Right, I'm going to take number 4 and then number 5 separately. Okay, so point 4 is we're asked to endorse the deployment of investment funds across Fund A, C and Fund D, according with section 6.2 and 6.4, noting that the Chief Finance Officer will determine the exact timing and distribution of funds pursuant to the Treasury Management Strategy. I will do a roll. Sorry, David. Yes.
I do beg your pardon here, and it won't affect the way I vote at all. But for Terry's purposes, you need to take the fifth one before the fourth one.
Chair, Councillor Jenkins is actually correct, or you can take the two together.
What do you mean actually correct?
Just in case anyone was in any doubt that it just for once you might not be correct, I wanted to emphasise that you were correct.
I would suggest, Mr. Chairman, that the vote takes both D and Councillor Rogers' amendment together.
Okay, I don't want the lengthy debate on how we vote, but is there anybody objecting if we take numbers 4 and 5 en masse, the pair together? Okay, that seems to be unanimous. Now we'll go to the vote. So we're actually voting on numbers 4 and 5. I don't think I need to read those out again. They've been read ad nauseum there. So in a roll call, please. Councillor Ian Bates.
For.
Councillor Chris Bowden.
Agreed.
Councillor John Gowing.
Agreed.
Councillor David Jenkins.
Fundamentally against.
Councillor Linda Jones.
Against.
Councillor Peter MacDonald.
Against, Chair.
Councillor Terry Rogers.
With amendment 4.
Councillor Tim Wotherspoon.
For.
Councillor Mark Goldsack. I'm in the Terry Rogers camp with amendment 4. Dawn, could you just read? I think we know the answer, but could you read that back to us, please, as a result?
Yeah, that's a majority in favour, 6 votes to 3.
6 votes to 3. Thank you very much. We've got quite a lengthy agenda before us. Are people at a point of a comfort break, or should we push on to the next one?
Maybe a couple of minutes or 5 minutes, Chair.
Okay, I'm happy with that. So if we could resume, then I've got 11:18 at the moment. Can we resume back at 11:25, please? We'll take a 6 to 7 minute break.
Could I just ask everyone to switch their cameras and mics off whilst we're on the break?
Okay, members, if you're there, please, if you could re-engage your cameras for me, please. And we will look to continue again. Just thank you for the cameras coming back on, and please remain muted. That would be very useful. We're going to move on, Dawn, to, I believe, item 7, the finance monitoring report. I would invite, before I do, I owe an apology, and I owe an apology to our 2 guests in the last item who I forgot to thank for their contributions at the end of the last meeting. So could we please note that I did that, Dawn, and I have already sent my apologies for not doing so, having bothered to actually turn up and be here to support that earlier. So I will follow that through. So please accept my apologies for that. So item 7, the finance monitoring report, and I believe we've got Justine Hartley here to introduce the report. Justine, you're
I beg your pardon for interrupting, but I'm being prevented from starting my video.
Ah.
Oh, now it's okay.
There we go.
See what happens when you complain.
Well, the interesting thing, David, with your holding photo and your look today, I didn't really notice much difference. But anyway, we'll move on. Thank you very much.
Justin, moves.
For the 3rd time, Justine, you're on. Let's go. Thank you very much.
Thank you. Okay, so this is the finance monitoring report, obviously at the end of January. As you know, the budget for commercial investment is an income target, effectively, so a sort of a net budget, negative budget. And we have been forecasting a shortfall against that budget all year. The forecast shortfall last month was 2.6 million, and that has increased slightly to 2.9 million. So a number of small changes really across a sort of wide range of things that have changed slightly to that position. So if we just run through those quickly, the first one is to do with the property investment budget. So we talked last time about the position on Brunswick, and we've been doing more work in terms of the expected occupancy and some of the debt that we think is irrecoverable on that. So this is an updated position that has slightly increased the pressure from that property. Contract efficiencies, again impacted by COVID, an e-learning module that was expected to be sold, if that's the right word, to other authorities in this year who are buying into that product, which has now slipped into next year again because of COVID. The investment funds, obviously we just talked about big investment fund, but so the ones that we're looking at here is the upside from the 2 current investments, so CCLA and the multi-class credit. CCLA, actually, this is an improved position from what we've been reporting previously. That's fairly on track. The multi-class credit, obviously, we didn't do in the timescale that we originally expected. And so that's created a pressure, and we also didn't invest the full amount. So that's a continuing pressure on that one, particularly in this financial year. Property services, a bit of pressure. There's quite a lot of building maintenance that's going on there that's costing a bit more, and a little bit of pressure of lease car costs. And then the final change really is on strategic assets, which is actually a good news story because we've got more money coming in So that's actually reduced that pressure from what we've been reporting in previous months. On the COVID table, in terms of COVID impact, the two changes are just reflecting what I've just referred to in terms of the pressure on contract efficiencies and the property investments, which obviously the accommodation is struggling because of the COVID impact on our ability to let. Capital, slightly bigger shifts on this one actually this month. So previously we were reporting an underspend of 14.7. Now we're reporting 24.7. It's not so much an underspend as an underspend in this financial year, and that expenditure really being slipped into the next financial year. So the three big changes on that, one is the housing. So there's a £3 million reduction there in terms of the loans that we're making. Obviously you agreed a large balance of those in October. Some of that's been drawn down, some of it hasn't, and the payments out of those are dependent on milestones being met, and a number of those milestones haven't yet been met, so that slippage is just really going into the early months of next financial year. North Angle Solar Farm was previously forecasting to spend its full £5 million budget, but £4 million of that's now slipped again into the early part of next year due to additional planning requirements. And the decarbonisation fund, again, just a bit of slippage in terms of what projects will be completed this year. So overall on the capital, it's not that we are forecasting to underspend on these projects, it's just really about timing and moving that forward to next year.
Okay, thank you very much for that, Justine. Anybody got any questions on the report and Justine's comments? David Jenkins, please.
Just a quick and trivial question almost, but County Farms is forecast to be in good shape with a zero variance at year end. The recent vacating of Manor Farm in Girton, does that not have an impact on this?
I can't say I know the answer to that off the top of my head, but I can certainly check that out for you. It may be that it will come through in next month if it's just happened, but I'll look into that for you.
Thank you.
I think what I would say on that, Councillor Jenkins, and I don't want to open a can of worms because our audit team is still working on this, as you know. But what I would say here is, as far as I was concerned, is that the tenant may have vacated the building, but I'm not sure he's vacated his responsibilities for it. I think that's where we're at this moment in time, rather than going into any more detail. I'm happy to add that at this stage. Okay.
Thank you, Chair.
No problem at all. Okay, well, we were asked to recommend to review and comment on the report in short shrift. I think that's exactly what we've done. Very good report, Justin. Thank you very much for presenting it.
Thank you.
Okay, thank you. Right, we're going to move on to item 8, which is the Commercial and Investment Committee agenda plan and appointments to outside bodies. Dawn, is there any updates? Sorry, are there any? Is there? What terrible English. Are there any updates to the agenda plan to report, please?
No, Chairman. The only thing to note is that we've got nothing for the 16th of April meeting, and as it's in PERDA, I'd be recommending that we cancel that one.
Okay, thank you. And whilst we're in open dialogue there, are there any appointments to consider?
No appointments, Chairman.
Okay, thank you very much then. So with that, we're going to move on to item 9. Item 9 is the exclusion of the press and the public. Can I ask the committee to agree that the press and public be excluded from the rest of the meeting on the grounds that the reports contain exempt information under paragraph 3 of part 1 of schedule 12A of the Local Government Act 1972 as amended, and that it would not be in the public interest for this information to be disclosed in discussion, as it contains information relating to financial or business affairs of any particular person, including the authority holding that information. We've got a couple of raised hands here. I'll take them in the order that they came. Councillor Wotherspoon.
Yes, I'm really sorry about this, Chairman, but I raised this at the very beginning. Before we take the vote on whether to go into a closed session or not, I'd like to declare a non-pecuniary interest in that I am the County Council's appointed representative to the Greater Cambridge Joint Local Planning Advisory Group. which will be helping to steer preparation of the Greater Cambridge local plan. However, I don't believe that prevents me from proceeding to take part in the rest of the discussion.
Well, thank you for bringing that to attention. I would agree with your assumptions there, and we're getting a nod from Dawn. So we'll proceed on that basis, Councillor Wotherspoon. David, you have your hand raised?
Yeah, Chair. We're actually going into private session for two items on the agenda, whereas I can sort of get my head around item 10 being in private because of the other parties being involved. I don't see any reason whatsoever why item 11 needs to be in private secret session. So I would like to propose that we find a mechanism for coming back and taking item 11 in public session at the end.
Okay, without talking about the detail, just in case, could I actually ask, I think we've got Alex G on the line. Alex, sorry to put you on the spot, but could you perhaps give us a steer here as to bringing this under confidential notice as opposed to David Jenkins's point?
I suppose, Chair, the only points why it might be confidential is because it talks about pre-cost tender estimates, and we haven't received the tenders back yet. So there's potentially commercial interest there.
Does that apply to both items?
Yes.
Okay, all right. Well, thank you, Alex. I didn't mean to put you on the spot, but you've answered that. You've answered that very well.
And is that a reason for keeping them in secret?
I believe it is, but I mean, you know, I'm open to other people to put their suggestions forward before we take the vote for private session. Sorry, confidential session. Nobody else is forthcoming, so oh, sorry. Oh.
I beg your pardon.
At me,
I know. I was waving at you. That's right. What I was going to say was that I mean, I'm not sure we can do anything much about it now, but for the future, couldn't it have been handled through a confidential appendix with the paper coming as an open paper? I would have thought that would have been the best thing to do. I mean, I don't like the idea that we're, in case it might be confidential, we're putting it on the confidential agenda when there are ways around it.
Okay, thank you for that, Linda. I'll comment myself on that in a second, but I'll bring Councillor Bowden in, please.
I think Councillor Jones is entirely correct in her suggestion, but that's now not practical for today's meeting. And given that we have a tender process in place where the tender documents, the bids haven't yet been returned to us, it would be very dangerous indeed and potentially counterproductive to us for us to have those discussions with the potential that they may influence in one direction or another the responses that are made in that tender process.
Okay, David, do you want to come back in on this? Your hand is still up.
Yeah, I accept these points. And pardon me for going through history, but this committee had a habit of going into private session wherever possible in the early days, and we shouldn't do that. We should take every opportunity to make sure as much as possible takes place in public. And there are issues here about why we should be spending more money, and that should be done in public. And so in future, can we exercise explicit control over items that have to go or presumed to be appropriate to be taken privately?
Okay, I'm gonna let Alex come in on this, and then I'm gonna wrap this up before we go to the exclusivity vote. Alex, please.
Yeah, thank you, Chair. I mean, I suppose there's really one other thing to say. The nature of the paper is because the tenders that are going out, excuse me, the tenders that are going out are over a threshold. Therefore, C and I need to approve those tenders to go out. If we just restrict the conversation to those points, then actually we could, C and I could note and approve as appropriate the papers that have been submitted. If there is, though, discussion around the costs specifically, though, that would have to, there is a commercial element to that, and we'd need to keep that out to the public domain at this time.
Okay, I would like to propose a way forward that, you know, this is, we'll cover this off in a little while, but this is likely to be the last meeting of this committee as it sits at this moment in time. I would actually endorse that where at all possible, we bring papers to this committee with as much transparency as is possible. I think that's a good thing. I think it's the right thing. I think we are where we are with these today, and I totally accept your points, Alex, and I think David has raised a very valid point. There is a limited reason for us to have stuff confidential that can, where we can discuss 70, 80, 90% of it and not talk about specific needs. So I think we need to just do those papers in that way forward, and I would certainly like that to see that adopted more moving forward for this particular committee. Other chairmen may want to do other things, but for me, I think as much as we can have as transparency, we are here talking about commercial aspects and investment aspects. We need the public have a right to know those, unless we are going to influence anybody that's a party to any dealings with us. So I think that's where we're at today. And on that matter, I guess we've now back to the vote. Alex and David, you still got your hands up. If I could ask you to wave goodbye to those, I'd be much grateful. Thank you. So with that then, please, I'm going to ask for the vote to move into confidential sessions for this particular item. Dawn, I don't think I need to read that out again, do I, please? But on that basis now, and having had that discussion, is there any real objections to going into confidential session at this stage?
So,
Chair, I will abstain.
Okay, Terry?
You said that this particular item, I thought we were dealing with two items.
Sorry, the two items. That's a slip of the tongue, Terry. Thank you for raising that. Okay, well, in that case, we'll go to a quick vote on this one then, and we'll go through the named list. Peter, I note your hand as well, so thank you for that. Okay, so to go into confidential session as read out, those in favour, please confirm. Those against or abstaining, please indicate. Councillor Ian Bates.
For.
Councillor Chris Bowden.
For.
Councillor John Gowing.
For.
Councillor David Jenkins.
Abstain.
Councillor Linda Jones.
Abstain.
Councillor Peter MacDonald.
Abstain, Chair.
Councillor Terry Rogers.
For.
Councillor Tim Wotherspoon.
For.
And Councillor Mark Goldsack for. Thank you very much. So we will go into confidential session. Dawn, if you could tell us when we're ready to